Guys, yeah, I think I've been looking for how to update you guys on most of the things I've taught you people for a long time, and I think this is my single opportunity to do so, and I'm going to be doing that on this video here. Okay, so first of all, before we start, let's quickly take a look at a few things. We are going to be looking at our trading checklist again. We'll reanalyze it. Trading checklist. Yeah, so what do you want to do? Your trend, you want to define it. That is number one. Define trend, right? Number two, you define where you are in the market. Where you are, where you are, whether a buy zone, right, or a sell zone. Okay, I also touch that. Then number three, you want to look out for shift in market. Let me call it liquidity sweep. Okay, liquidity sweep, or if you can't call it liquidity sweep, just look at where a particular area was taken out, either a support or a resistance was taken out. Okay, so let's take it for example. If market is going like this, this point is a liquidity zone, this one is a liquidity zone, this one is a liquidity zone. Okay, and if it is coming down like this, this is a liquidity zone, and so on and so forth, and this ones too. I get it. They are all liquidity zones, all of them. Karuche, support and resistances are liquidity zones. Now it depends on how you are going to be applying them. Now that is three. Then four, very, very important. In fact, it's the most important point here. After you've done all this, right, and you've come here, please, after this liquidity sweep, there must be a what? Shift in market structure. A shift in market what? Structure. Okay, very good. A shift in market structure. So let's quickly go on the charts and do some analysis, and you're going to be seeing it practically what I'm talking about and what I'm showing you. Don't forget this checklist, very, very important. Okay, these are the conditions your chart should fulfill for you before you enter a market, or the conditions you should watch out for to be able to make a trading decision. Are we together? Good. So let's quickly take a look. Let's say, for example, let's go and use Euro USD. That is the pair I love using very well. Okay, good. Let's now go to 1 hour time frame. So I will clean everything that is here. Let's go to what? 1 hour time frame. I mean 1 day time frame. Quickly. Now you can see that we are on our 1 day time frame. What do we want to ascertain? What do we want to find out? Want to find out where are we, and what the people that have taught, what did I tell you? You look for your swing. And what is our trading rule? For everything currently happening in the market, for every price currently in the market, it's usually based on a previous swing. Are you with me? So here, this is our previous swing, and right now this is our top, right? And this, one second guys. Yeah, this is our I think this thing should get deleted. Okay, this is our top here. This particular area is our top, and this is the bottom of the swing, isn't it? Good. Remember the distance between a support and resistance swing. Yeah, now we now have this market here moving this way downwards. All together. Now in as much as prices are not above this high and they are not below this low, everything happening here is based on this swing. All together. Good. Amazing. Now what next do? we want to place our Fibonacci on it. You guys remember how I taught you now using all these Fibonacci's? So I will increase this thing so that it will be a little bigger for you. So what do? You place your 100 on top, you place your minus 100 under like this and lock it up. Now, how do we define which zone we are in the market? I want you guys to take note of this. Very, very important. This is what you do when you have been able to identify your swing. Take note of this, the highest peak one and the lowest peak and the lowest bottom. 50%, which is this zero, right? This is their 50%. So you see this zone here, and remember we're on 1 day time. Okay, you see this zone here is a sell zone. You see anything below this other zero, below this upper part, this whole second 50% is a buy zone. Are we together? Now, me and you people, we have studied in the class that what our first entry is minus 27%, first entry. Second entry is what? Minus 62%. Then for our third entry, we have to switch now such that our 100 comes down and our minus 100 goes up. Then our third entry is going to be what? 79%. Then for our fourth entry is going to be based on what? Our zero. Now we now have to shift this zero here. It will have to shift down here such that this minus 27 will be lower, and that will be our fourth entry. Remember, this one is third. This one is third. Do you understand it? So please pay attention to my language very well so that you can get it better. And you can see exactly what happened. We came directly to minus 27 and we bought. We made a higher high and we came back for the 79% level for a buy. I've taught you guys this thing in class. So the only new thing I've added here is determining like the zone you are, whether it's a sell zone or a buy zone. Okay, if you met market inside this zone here, this whole above this zero here is a sell zone. If you meet it below here, anywhere below here, is a buy zone. Do you understand? So now after you've been able to identify if it's still in this zone, it means we're in a downtrend. If it's here, be watching out for, if depending on which level it is, if it just entered, watch out for signs of trend reversal. I get it. And if we are coming up this way too, when we enter here, watch out for sign of trend reversal. It's just simple. Are you with me? Now this thing I'm telling you people, it doesn't work with gold. It doesn't work. That's a fact. So now yeah, you look for a trend reversal signs. Now let's take a look here if we do have trend reversal signs. And based on what I've taught you guys earlier, you can see that okay, I taught you people that if you have a market, let me reduce this in so that they can give us space. If you have a market with this kind of market structure, now we do have lows and high, lower low, lower high, right? Lower low, lower high, lower low, lower high, and so on and so forth, and we keep going. See, lower low, lower high, and boom boom boom, high there. Now we come to our minus 27%. If you miss trade here, what do you wait for? You wait for a shift in market structure. What do you do? Remember what I told you before. Immediately you see a shift in market structure, you can put your FIBA and just come in at 79% level. This way, I've taught you guys this. Okay, and remember I told you your SL will always be at what? At that is be at 100, right? Good. You can see our 79% level market actually just the gap self just fell into it and we bought upwards. So what are we looking forward to here? I want to now show you guys the second part, how you are able to identify trades based on the checklist I gave you guys earlier. Now this is what you do basically. It's quite easy. Now after you have seen you've confirmed that what there is a shift in market structure, you want to come and check. Okay, now everyone watch with me, watch exactly with me. You are going to see what we did here. Observe this market. By the way, we are on 1 day time, right? Let's go on lower time frame so that we can see the candlestick formations better. I think 1 hour will be too small for us. Let's go on 4 hour time. Now you can see the market structure. Like this was what we had. This was what we were having downwards here. Low, lower low, lower, yeah, lower high, then lower low, right? Then higher high, indicating a shift in market structure. The question we ask ourselves is, when we had this shift in market structure, was there any base that was taken out? Take a look. So the base that was taken out was this base here. A second. The base that was taken out literally was this base here. This one. This bottom here. Can you see it? That is what was taken out. It's there for you. Very, very clean, clear, and neat. So I think I should use maybe a green spot for it or something. Yeah, something like that. Yeah, that's the point that was taken out. And which move took it out? See the move that took it out here. This particular move, it was one that took it out, right? And this same move, from it we made a higher high. So it just simply tells you that, you see this level here that was taken out, there are ways to do it. You want to see clear candles, so I will go down to the let's say 15 minutes now and go and check for this point here. Are you there? Good. So I'll go on 15 minutes quickly and check for that point. Okay, good. I'm on my 15 minutes time frame right now. It doesn't have to be 15 minutes, sometimes 30 minutes, 1 hour works. Now, and I want to inform you people about something that is very, very important. Anytime you have a candlestick, what would you use is the last sell candle before the buy. Okay, the last sell candle before we buy up. That is what we call an order block. But then I don't use all those terms. I just keep it simple. The last sell candle that was on that place that was cleared out before the buy, and if it was a selling position, it will now be the last buy candle before the sell. Are we together? Now take a look. This is a case whereby you have this isn't our last sell candle. Now this one is our last sell candle, but then there's an issue. We have a sell candle that bought, that kind of covered up all this one. So you want to be able to see what is happening here very, very well. I think that might warrant you to go down to maybe 5 minutes time frame to see more, or I think maybe we should remain on 1 hour also. Yeah, I think we should remain on 1 hour. Okay, so when you remain on 1 hour now, what do we see? Let's see. Now we do have a very long candle, a candle with a very long body. The rule is that when you have a candle with a very long body, you don't use the body, you use the long wick, either like this. That is what you use. Now what do you do now? On your settings, you can see you can extend this rectangle to the right. Yeah, so that is what I always do. So I'll change my settings back to my yellow, and this one I don't want it to be that filled. So I've drawn that rectangle now, and I've dragged it to my extreme right. Now what is the rule here, and what are we looking forward to here? We're looking at, you see this rectangle, this base here, this move cleared it down and form a higher high. The rule is that when we are going to come back into this rectangle here, we are going to buy from it. It's as simple as ABCD. That is how it works, and that is how it is. You get what I'm saying? Remember, the criteria that you must not escape is the shift in market structure. When we clear the base, that is, we clear the base. If we don't have a shift in market structure, don't expect this kind of thing to happen. There must be a shift in market structure. Then when we are going to come back to it, we are going to buy. It's simple. That's how it works. Now there are many criteria you can use. You can also decide to use your Fibonacci here if you want to make it a little bit more concrete for you. Okay, and you can decide that And there are various ways that you can use your Fibonacci. We can use the minus 100 and 100 too, right? This way. So in this situation, the minus 100 and 100 worked very, very perfectly. But whichever one you want to use, all you have to know and have in your mind is that what this place here, this zone, and this former place that was taken out, or this base that was taken out by this move before, by the time we make a higher high, when we are going to be coming back, we are going to be coming back into it for a buy. And this also is vice versa. Like vice versa, it also happens in the opposite scenario. Let's take, for example, let's take a look at an opposite scenario case. Okay, now I want you to observe here. This is what we do have in an opposite case scenario. Tag. Okay, 1 second, guys. Second deleter. Okay, now you see that the first of all, we need to identify which zone we are, and most times that is what you need to actually be careful about. So now see, we have this high, right? Then this low. We have this high taken out, right? What high was taken out? This particular high here, it was taken out by this particular move. Then we made a lower low. Remember, now we have done a shift in market structure. What do? We wait for market to come back into that place that was taken out, and it is going to be our selling point. Now I want you to observe, you can see we have a candle here at that point that was taken out with a very long wick. So we are only interested in the wick, okay, of that candle, not the body. But assuming it didn't have a long wick, then you would take only the body. Okay, so this is how we do it. Then we'll put it like that, and you can see that when we take it across, you can see that market came back immediately into this area here, this zone. See it here, market came into it exactly, and what started selling from there. That was how I was able to take my AUDUSD trade in the morning. And guys, that is the updated form of what I wanted to teach you people. Already you people already know how to use your Fibonacci. Is very, very easy. It's straightforward. I get it. And I don't think there's any stress about it. There is no stress about it at all. Now someone might want to ask me a question that, okay, how about this scenario here? Okay, there are, you people know that this our trading is not all the time that what you are doing works. That is where risk management comes in. So when what you are doing doesn't work, it just doesn't work for you. I get it. And you just have to just believe it and just keep on and just keep working on what you are doing, and don't lose trust in yourself. Basically that is how it is, and that is how everything about it. I hope you learned something today. So just a summary on what I just on everything I said. I think at the beginning of the video you have your trading checklist already. So let's quickly take a look at what I just said, everything I said here. And it's going to be 1 second. This thing is not working for me, I don't know. Okay, it finally worked. So a summary of everything I've told you. So if it is a buy position, remember you have to be in an uptrend, or the trend should have shifted. Okay, that is, the trend should have changed. So you have something like this. We will have a liquidity sweep that is taking out this low here. Then you must make a higher high. Then the thing says that when you're coming back here, you are going to buy. Now, not all the time it does happen. Sometimes it can always pull back down and take out this low too. So you need to watch out what you are trading and how you are trading it. And sometimes this is how it goes. You can go maybe okay, something like this. We take out this high, then come back, make a lower low, and yeah, when we're going to come back into it, we're going to sell. Now there are differences, there are little bit deviations. What are the deviations we do have? These are the deviations we have. If you have, let me show you quickly. If you have like a trend like this, right, then you now let's make it this way. Let's make it this way. So let's say you have a trend. Let's say the trend is like this, and you came and you took out this low, right? And you came, you make a higher high. You should know that by the time we are going to come back here, this place is going to be your buy. And how do I get it from here? Do you understand? So that is the same way it goes. And let's quickly take a look at one last one. USD card. USD card. How do I know? Like, how did I know that USD card was going to buy? See, it was a very simple trade to take, and it was very short-lived. It was very short-lived. The same principle. See, the low here, this move took it out, made a higher high. Just shows that when we come back into this zone, we are going to buy. And what do you see? We came back into it, we bought. And usually it depends. Sometimes the moves can be very large, sometimes they can be quite small. So, but then at the end of the day, I think 78 pips wasn't a bad thing for a trade at the end of the day. So that is it. You guys, I wish you good luck. I wish you a very happy time. Hope you learned something. Yeah, take care, guys.